Hey guys, Ben Nash from Pivot Wealth here, and today pumped to be here with Tommy Honan. Tommy is one of the co-founders at Swiftx. They're one of the well, not so new, but up and coming players in the crypto space. Keen to unpack, especially in light of all of the wild sort of swings and roundabouts we've been seeing over the last little bit. Take on the crypto market, what sort of insights we can get from what we've seen in the past, as well as some of the trends that we're seeing in that space. Tommy, thanks for joining us, buddy.
Thanks, Ben. Mate, thanks for having me on. Yeah, excited to have a chat about it. It's been a heavy couple of weeks in the industry, but we're continuing to front up and talk about it, and I guess bring the right information to people.
Totally, mate. And I got my notepad ready. I'm really hopeful that what you're about to say next is going to make me a pile of money. So please don't hold back. But what is your take on what's going on in markets today?
Oh, mate, I mean, we've seen, I guess just talking about the last 18 months in crypto have been, I guess we've seen exponential growth in the crypto markets at Swiftx, which is our business as well. We've gone from kind of 15 employees to I think we've got about 260 today in the space of about 2 years, and it's just, I guess, a sign of what's happened in the markets over the past couple of years. Exponential growth since that kind of 2020 March crash, the COVID crash that everyone calls it. So from there we've seen kind of your major assets like Bitcoin. Obviously everybody knows Bitcoin these days, and Ethereum. Bitcoin went from like a $3,000 low in March 2020 to almost a $70,000 top of market in kind of mid 2021. So that's talking to the last kind of what's happened about 8 months ago. Where we're at right now, we've just seen a pretty significant correction again for crypto. Bitcoin, as we're recording, sits at about 31,000 US. So well down from that market top. I guess there's a bit of a correction was needed within crypto. We'd seen quite exponential growth, like I mentioned. A lot of assets were definitely, I reckon, were overinflated. Not calling out any in particular, but some of the altcoins, they do get a rap for having that extreme growth, but also as we've seen in the last few months, it's pretty heavy corrections. We're talking 70-80% corrections, which are obviously not something that everybody is happy to stomach at the time. So as at the time of recording, we've seen probably the most volatile 2 weeks in crypto. I guess that I've been involved in for a few years.
Yeah, it's pretty wild out there. And look, I'm put my hand up and say I'm not a crypto expert, although I am a big believer in the future of crypto and digital assets as an asset class. I think for the right people with the right strategy, and making sure you got all those ducks lined up. But what I can, and I know that the past doesn't predict the future, but it does give us some insight into how things play out. And from doing a bit of research for some content I was putting together, and also in making some of our own investments, it's when you look at what's happened, that is how it tends to play out, from what I can gather, at least for like Bitcoin. And that's what I'm invested in. I tend to stick, I was just chatting offline, like when investing in the bigger, sort of more established players, in whether it's shares or ETFs or crypto. But you see a big run up, and then it seems to cool off, and it cools off to a level that's above the previous sort of lows, and then it continues on the up. Are you seeing any structural changes that you think that I know that we don't have a crystal ball, but like that might be changing, or what are your thoughts?
I mean, as we stand right now, the historic drawdowns for let's talk about Bitcoin, have been 70-80%, right? That's what we've seen back in kind of 2014, 15. We saw it again around the same in 2018, like that 17 big run up that everybody, the hype cycle that happened around crypto at that time. I guess the market has moved on and matured quite a bit from there. So, there's a lot more money in Bitcoin. We're talking about an asset class now that's just over $1 trillion of an asset class. And 8 months ago we were sitting at about $3 trillion of an asset class. So I guess it has grown up as an asset class. We are maturing. There's a lot more institutional money in the space now, and these guys are not investing in for a year or 2 years. They're investing for 10 years in the asset class. In terms of the drawdowns that we've seen previously, I think that will continue to happen. And we're sitting at about, like I said, 31,000 now. So we're sitting at about I think it's a 55 or so % drawdown. So there's definitely more potential for I guess for us to put in a higher low on the chart, as we see. Our kind of 2-week 200-day moving average on Bitcoin is about 21,000, and historically that has been the support line that generally holds kind of for the bear market. Not obviously no crystal balls, like we said, but we haven't quite got down to that yet. We did see a breakdown recently to about 25k, and then kind of a sharp recovery back up again. So in terms of that market structure, I think we're still pretty on trend for what we've seen in the last kind of 3 cycles in crypto.
Yeah, it's interesting. I was just actually reading an article yesterday, and as you said, that there are now a lot more professionals and institutional investors in this space as well. So there was one fund manager, and they were talking about, like, they're stoked because Bitcoin's on sale now, so they're just replenishing their coffers, taking a long-term view, but comfortable that they're picking up investments that they probably would have bought 6 months ago at the price that are now 50% off. Buy one, get one free. So,
it's sorry, I was going to say, just like, it's interesting. We talked about mindset earlier on. Like, the best time to buy anything is never at its all-time high, right? Like, just it just makes sense. Like, you look at the P&E of a company, or you look at your kind of risk to reward ratios on doing your due diligence on an investment, and I guess right now we're looking at a 55% drawdown from an all-time high, and we're looking at sentiment at absolute, almost at all-time lows, even though we still haven't put in any lower lows, essentially. So these are kind of things that we do stick by, and I guess it's, if you're gonna draw a line in the sand somewhere, I mean, these are the kind of things that you have to kind of gauge yourself from. Like I said, nothing is set in stone with these markets, and they will continue to be volatile. But I guess it's interesting, you talked about the institutional money, or that more experienced money coming into the market. We've got the likes of banks in Australia starting to talk about custodying crypto and giving options for people to get into crypto. Like, these guys don't make these decisions on a whim. Like, they're very slow, they're calculated and considered. Commonwealth Bank was one. ANZ have recently announced the launch of their own stable coin, so an Aussie dollar cryptocurrency that tracks the price of the Aussie dollar, and that's more of a I guess a utility asset that they'll use for, like, cross-border payments and international transfers and all these kind of things that don't cost you an arm and a leg like you would on this current Swift system or whatever else you want to use. So I guess these are all really positive signs for the industry as a whole, and if you start to break it down by asset, you can get lost pretty quickly. But if you start to just think about it as an industry and a technology that's evolving over time, I think it's there's a much more positive view to take on it. But we're on both sides of the fence. We have to look at it from both sides.
Totally, yeah. And I think that the fact that all of these bigger companies, institutions, governments, like, they're all sort of adopting the technology, which suggests that it's something that you can't ignore. Like, it's going to be here in the future. It's just a matter of what exactly that looks like. And yes, there's uncertainty, but it also seems to make a lot of sense. So
sure. You look at the ETFs and stuff as well, Ben, that have just launched. Like, there's spot ETFs coming to market in Australia. So there's a lot of money. Like, we know from some of the research we've done, not just Australia, but internationally as well, like around the UAE and these types of countries. There's a lot of sovereign wealth sitting on the sidelines waiting for regulation around crypto, because we're still playing in a space that is almost, it's self-regulated. So Swiftx is a business. We're quite mature in our processes and our I guess our stance when it comes to AML programs and counterterrorism financing and all this stuff. So we have to go above and beyond, and the other crypto businesses in Australia have to do the same. It's all very much self-regulation, and we're welcoming the day that we get some structure and some proper guidelines around what actually is expected. But that day has not come yet. We're expecting to see it in the next kind of 12 months, though.
Yeah, well, fingers crossed on that. I think it
Yeah.
will lead to a lot of people getting more confidence in what they're doing. I suppose we'll wait and see what happens with the election as to,
Sure.
how much bandwidth they have for this. I know that there's some discussion papers out there, but I think Labor have come out and said that they're going to throw it all out and start again, potentially if they get into power. So hopeful that doesn't push things back too much, because I think ease of access, comfort with the regulation, it's great to know that, with an app or a regulated product, that we go, okay, well, investors know that they just need to be really smart with what they choose to invest in, but they don't need to worry about, some of the other potential risks in these products. So I think that will be really welcome for investors. Tommy, I might be putting you on the spot a little bit with this one, but obviously there's been a ton of news out in the last week, Terra Luna and all of the saga around that. For just ordinary human beings, can you just unpack like what actually happened there and what that means, and maybe what we might be able to learn from it when we're investing in or going into this space?
Sure. So Terra Luna and the Luna network, essentially, like I'll try and unpack this in a kind of a TLDR or an easy manner, but the long and the short of it is, this project had a US dollar stablecoin that was being used in decentralized finance to earn yields of up to about 20% per annum. So what people were doing was they were buying this asset, which was called UST. They were depositing it via a platform called Anchor Protocol, where they would essentially have sit in a pool of money that would earn 20% per year. So on the face, quite lucrative. The problem with it was the peg to $1, which is it was supposed to be a US dollar stablecoin. That peg to $1 didn't have the sufficient backing in the event of a bank run, essentially. And that's probably the easiest way to explain it. The reason that it failed and it had such a quick failure was because I think a lot of people didn't have enough trust in it to start with. A lot of people had overextended themselves, but were I guess lured by that 20% yield, right? So that was the big thing here. I was like, why would anyone do it? Well, 20% on your dollar is lucrative. Exactly, yeah. But people did not understand the correct risks. What happened was there was a bit of speculation around it, but there was what we can see a kind of a strategic attack on the network to try and short that stability, or that peg on that one UST to the dollar. And essentially it started losing its peg. It went from worth $1 down to 75 cents. So if you'd put in $1, you're now only worth 75 cents. So there's your 20% yield eaten up, right?
Yeah.
Exactly right. So it did recover slightly. The project founder came out and said, hey, listen, this is temporary. We've got some measures in place. They had it backed with some Bitcoin as well. They started to sell that down just to try and restore the peg back to $1. It momentarily recovered, but I think it was too late. The confidence was gone. Everybody tried to go in at the same time, and essentially this thing just went down and down and down and wiped about 80 billion of value in 2 days. So
wow.
Yeah, it was an outlier. I mean, we've seen projects in crypto fail before. Like, we'll see it again. It's not new. It was really in the manner in which this one failed. It was also a project that was quite heavily, like, it had some pretty big backers behind it. So it wasn't a Ponzi scheme. Like, you'll hear rumors about all this Ponzi scheme. Like, it just wasn't. The protocol itself just had flaws, right, in how it maintained its value. So that's how that played out, Ben, and that's kind of, I think, probably the easiest way I can explain it. But essentially, like, recording today, the Terra token itself, which is the network token, is they printed that thing into oblivion. It's now trillions of supply, which obviously took the value away from that one because oversupply. And then with UST, which is the stable coin, it had nothing to back it anymore, so it just continued to drop and drop and drop. And Yeah, there's some really
Mm.
actually. There's been some eye-opening stories, and there's a lot more to play out in this. I can tell you, but there was I heard about in Europe that companies and neobanks had spun up businesses and integrated like the likes of this protocol in where people's savings had sat in a neobank. So you think you're in a neobank and you're earning 10% yield, and they're going out to this protocol and they're backing it with 20% yield, which is
Yeah.
fine when it works, but then when the
Yeah.
rug gets pulled, and there's a lot of bad stories around this, and obviously your thoughts go to these people, and it's in times like this that, like Swiftx as a business, like we're very close with our customers. We pride ourselves on having that customer interaction and being there and listening and just trying to help people in any way we can. But there's a lot of bad stories out there. There's no way to shirk away from that one, mate. But that's
Yeah.
the long and the short of what happened with Terra specifically.
And I think that like this staking is getting more and more common and more popular with investors. And I know of a bunch of people that have done it really well, made a whole pile of money from that. For people that are interested in this, I think you sort of what you touched on there, that people don't really understand the risks.
Yeah.
What should people be looking for? Yeah, what should people be looking for with this, or how do they understand that more? I know that you guys have got some great resources there, but what should people be thinking?
I guess like it comes down to, I guess, with any investment, you just have to spend that extra bit of time, Ben, to actually research what you're about to put your money into. Like you wouldn't, I don't think so. You wouldn't just you wouldn't just look at an equity that you like the name of and put money in it, right? So it's really around education, and the things that I'm looking for, I guess, is who it's a bit conflicting because everything I'm about to say, somebody would have maybe done this for the recent project that failed, that was
Yes.
unforeseen. So it's kind of hard. But
Mm.
like you look at you try and read the white paper, which is commonly known in crypto as like the business plan for that crypto. You look at the founding team and what their experience is, what their backers are. You just try and dig into what problem it's actually solving if you're trying to invest in an actual asset within crypto, or any asset. Like if you're buying a coal stock, or equities in the bank, you know what these guys are doing. But with crypto, it's no different. You just have to try and figure out what are they providing, or what value are they providing, and it is harder in crypto to find it, which is why I touched on before. Like at Swiftx, we do have a learn platform, so it's Swiftx Learn that you can find easily online. We have like little modules that break down particular assets. It breaks down like staking. It breaks down like how you can earn in crypto and like different things like that. So I guess there's a couple of kind of high level things that you need to look out for. But I guess it's just when you start, just start slow, start small. And I am a big believer in like learn by doing. I don't
Mm.
know if you're the same, but like I would rather put $10 into something, give me a bit of an incentive to go and learn more about something. But
Mm.
as well, on actually something that we provide on Swiftx that I'm pretty proud of is a demo platform. So you can actually start investing in crypto without putting any money into it at all. So you can invest in your Bitcoin, your Ethereums, or any cryptos that you want, and it'll actually give you a profit and loss like idea of how those trades would have went for you. And
Yeah.
over time, so a lot of people start like that. Like I know a lot of our older demographic will start there, and we give you like a $10,000 balance, and you can go and play with that. And I guess, and that kind of is like learn by doing without putting any money in. So yeah, I
Mm.
mean, it just all goes back to research and asking questions and leaning on the right resources. Like I talked about the support like that we provide, but going to the right places for your information, I think, is really important. Like there's some really good podcasts, and I might give you a list of these you can post for whoever's listening later on that I
Sure.
really like and I follow. And don't just go to your Facebook page or your Twitter page where people are, or YouTube. Like it's quite dangerous. So you just have to be aware of the information you're actually sucking in at any given time.
Totally. Yeah, and we'll put those up on the show notes.
Yeah.
But I think it makes a lot of sense that for some reason, when it comes to digital assets, that often people fall into the trap of not approaching it in the same way that they would with a share type investment. Like you say, that you wouldn't buy shares in Coles unless you understood what they did, or you'd think it was a bit reckless if you're buying shares in a company without understanding what the company's about. Digital assets are the same.
Yeah, we definitely have this. We definitely have this kind of a narrative. I know it's a narrative. It's an expectation in crypto that it's a short term investment, and short term investors 90% of the time will lose. It's probably higher than that. Let's be honest. It's probably higher than that. People with the longer term outlook, probably like yourself and myself, and I know a lot of our investors on our platform, where we try and get into that methodology of, hey, listen, this isn't a 6-month investment or a 1 year investment. Think about the 3-year, 5-year timeframes, and that actually it's actually counterproductive to how our business model works. We want people to trade more, being honest about it. We're a business, we're a for-profit business, but we still promote take custody of your own assets, trade less, think about the tax implications, and think about the long-term time horizon. So it is for us, for everybody. If a particular industry, if the people using that facility or are in that industry are winning and they feel like they are educated and doing the right thing, it's better for everybody. So that's kind of the way we look at it as well.
I say that the only time you ever lose on an investment is when you sell. So the more frequently you're selling, the more opportunities you're giving yourself to actually be losing out. And I think it holds right in a lot of cases. Yeah. Well, Tommy, what trends are you seeing from investors at the moment?
Right now, it's very much your top assets, right? You're looking at people are going for Bitcoin, Ethereum. There's a lot of money that has came out of, or a lot of value, I should say, probably that has came out of the altcoins, that have drawn down that 60%, 70%, 80%. That's washing, I guess, into the top assets like your Bitcoin and your Ethereums. They've held up relatively well, even though I said they have drawn down from all-time highs 50%. But in saying that, they're actually holding up significantly better than any other asset in the space. So there's still a lot of conviction on those assets. Fundamentally, nothing has changed. We're just in this range of the market cycle, right? Stimulus has stopped somewhat, where there's inflation fears at the moment. So these are all things that are playing into a stagnated market, I suppose. And it's not just crypto. It's also equities and housing markets. And I've seen a new prospective policy from the Liberals about getting access to your super to buy houses now, and it's a bit crazy at the moment, right? If you actually wrote it all down on the whiteboard, you think that it was it was a bit strange. But yeah, in terms of other trends, I know about our high value investor group, it's definitely those top two assets that you can earn a yield on is something that people are just constantly flocking to as well. So you've got your kind of your proof of stake assets, so the likes of your Cardano and your Polkadot and these assets. Not saying to go out and buy them, but I'm just saying these are the kind of trends that we're seeing. People are moving towards an asset that can actually naturally generate you a yield while you hold. So obviously you need to do your research on the project. Is this the right project for you? Do you believe in what the team is trying to do, and are they making a change? Or it all comes down to that initial research. But we definitely are seeing a trend of people moving towards an asset that you can sit in a staking protocol, or on Swiftx we have an earn feature now where you can actually sit your assets. We've got 20 different assets that you can earn on in a particular wallet. So these are the kind of trends we're seeing. People are, I guess, kind of thinking about, I think about term deposits back in the day, right, where you could sit your Aussie dollars in and earn 6, 7, 8%, right? Those days are gone now, Ben, unfortunately. Okay. But yeah, I guess they're the type of investments in this kind of a market that people are looking for. Key differentiator there is you're actually earning that asset. So when I say Polkadot, for instance, you can earn about 12% yield per year on that, right? But when you get paid out, which is every couple of days, you actually earn the asset. So if you're earning the asset back, that 12% per annum back every couple of days, and it compounds, you've also got that token price at a lower price because the markets are down at the moment. So that's why kind of people they're trying to build their stack, or any assets that they have they're particularly keen on, or they've done their research on, or they have conviction on long term. that's one of the main, I guess, trends we're seeing, and that kind of goes for our wider user base, but kind of stemming from the high net worth investors, I would say first.
Yeah, look, I think it's certainly something that I'm having a lot more conversations about with people that are looking at these yield-based investments that offer yield, and I think it's getting more and more popular. I think it will continue. What would you say? And you mentioned a few things already, but what are the biggest mistakes that people make when it comes to crypto?
I think just jumping on trends, Ben, like coming in with their hands open and their eyes shut. Like we do see at times, like, you would have seen the meme coin kind of phase that we went through in like late 2020, where, listen, people made a lot of money out of it, but they were just jumping on hype. People just following, like I said, Twitter and YouTube, and these people have an incentive to push you in a particular direction. At Swiftx, we don't have that, so that's something that's, I guess, we are kind of market neutral, which is really, really good. Just the research piece again, like not knowing where to go or not knowing the right research to do. That's where I mentioned again with our Learn platform, we have broken it down into very easily digestible modules where you can learn about a particular asset, or you can read about a particular like group of assets. For instance, like you can learn about all the staking assets in one place, right? So if that's something that interests you, you can go and learn all about that in a couple of different modules in our Learn platform. So it generally all comes back to research, and I guess just thinking before you act. Like it's really the same thesis for any investing, really. And it kind of it's just mistakes that people make all the time. They constantly do it, and then I guess it's kind of like they learn by losing at times as well. Like they'll jump into something first, and then they'll try and do the research after. Whereas like it's obviously the other way around. So I guess it's really important to not get carried away with the hype, and actually just slow down and take a breath and treat it as any other investment that you would do. And I guess just that longer term mindset as well. Like you said, you don't lose. You're not losing, and you're not realizing a loss until you actually sell, right? So, in recent market corrections, we've seen people are just so quick to sell. Like even there's a bit of a drawdown, and there's arguments on both sides, but I guess it's just having that experience in markets, and it really just comes from time, unfortunately. Like I've made these mistakes myself over the years, and I'm sure everybody that's invested has. It's you kind of make it you're too reactive to the markets, and you're a bit too emotional. So taking away the emotions of it, and setting out a kind of a plan for where you triggers for you to act in certain situations, and trying to, like I said, strip that emotion away. Emotional investing is a lose game, a lose game.
It's hard. It is hard to avoid though in that moment, because the passion runs and the mindset and all of those things. But I've found that the key to that is that you want to have a clear, considered strategy. And I think exactly what you've said there, that if you're just doing stuff because other people are doing it, that's not a very good strategy. Like hope is not a strategy. It's like, we know these are the crypto or digital assets that we want to get behind. This is where it fits into our portfolio. This is where we're going to manage it. This is how we're going to manage it. And then you follow it through. And then when something happens, you go like, well, it's still there. It's still, the reasons are solid. I'm not going to be reactive. But sometimes
I think one of the main, sorry, I was going to say, like one of the main things that I try and teach, like even some of our new staff at Swiftx, they get involved in crypto. They might not be crypto people when they join, but they do, they get in it and they're interested and they want to learn how the platform works. And, the same as any new employee starting the business is actually learning when to profit and how to profit. And we do have some nice modules on the Learn platform as well that we can point people towards around, everyone always thinks when you sell, if you're up and you sell, you always think you're going to miss on, another 10x or 100x or 5x your money. So I guess it's just that, like, if I could go back in time and teach myself something from when I started in investing in general, not just crypto, it's just take profit, like learn when to take profit and try and map out those levels of profitability that are reasonable. And, you don't always have to hit a 100x or a 10x in an investment. doubling your money in a couple of months or 6 months or a year is an awesome investment no matter what way you look at it, right? So I guess it's just being realistic about when to take profits as well is it's a big thing, and it's a mistake that investors make all the time in crypto. It's not knowing when to sell.
And I think that you take some risk off the table. You see, you want to know how it fits in with your strategy, like why are you doing this stuff in the first place as well. But I was just going to add that I definitely learned a lot of my investment lessons by getting it wrong. Like, thankfully, when I started investing, I didn't really have that much money to lose, but I lost a lot. Like when I was in uni and first started into trading, picking like penny stocks, and learned that lesson that way. Tried trading Forex for a bit. I thought I was a superstar for a while until I wasn't, and then learned that lesson the hard way as well. And I think if you can start small, like you said, learn a bit by doing. Even if you do fall into the myth of thinking that you can, you do have the Midas touch, then you can learn the lesson and set yourself up for, being smarter and taking that on in the future as well.
Yeah, man, absolutely. Like it's about that. I guess it plays into financial literacy. We don't get taught this stuff in school, so people kind of come out, and some people go to uni and they learn it through degrees or what have you. But like the financial literacy, I think is a systemic problem globally, not just Australia, but it's and it's part of a wider, a larger conversation. But I think we are shifting towards people are self-educating a lot more in the finance, and I think Australia is actually pretty good in that area. Like I spent a lot of time in Europe. I'm Irish originally. People don't know anything about money in Ireland. I can tell you that. Like, it's quite scary. Like, at least the young kids coming up now they've got comparison sites where they jump on and they do these things, and they look at what bank accounts they should be using, and different strategies for protecting wealth. Like there's a lot of gaps there when it comes to even just internationally or country to country stuff as well. So yeah, we got a long way to go, but I think I think Australia is doing pretty well there.
Well, I think there's more and more businesses and organizations and groups that are providing literacy to their people as well. So I'm hopeful that I know that they're offering some subjects in schools now. I don't know how far that goes in personal finance management, but I think, it's great. It's great to see, and obviously a big key to making smart decisions, but being confident in what you're doing as well. But Tommy, mate, really appreciate you sharing your insights. For people that are keen to learn more about Swiftx and what you guys are about, what's the best way for them to go about that?
Yeah, mate, they can go to swiftx.com, nice and easy. So you can see the picture up behind me there. There's how you spell it. It's a bit of a hard one to spell at times, but yeah, mate, we've got an app on your Android and iPhone store as well. That's really intuitive. It's pretty new, and yeah, looks pretty good. And we've got you've got the Swiftx Learn platform. That's kind of a website as well that people can go to and do little modules, like really trying to push people towards that learning piece before they even get started, and start small. And I guess the last one is to check out our Swiftx Earn feature that we just launched, which is essentially a way to earn interest on your cryptos while you hold them as well. So we've got 5% on Bitcoin and 5% on Ethereum. If you're planning to hold cryptos longer term, and you want to try and have a bit of a protection mechanism to earn some interest while you hold them, well, then you can avail of that feature as well. And we got a couple of stable coins in there, like Australian dollar stable coin as well, so you can put in your Aussie dollars and earn about 5.3% at the moment, which is you can't get that stuff in too many places. So yeah, I guess just check out a few of those things, and yeah, always hit us up. We got some pretty good resources on our website.
Awesome, man. And we'll link that in on the show notes and stuff as well. So guys, get around it. Take advantage of the learning resources. I think even if you're not going to invest in crypto, in the short term, it makes sense to start building that knowledge. And it's really a muscle that you do build over time. So I think that's a key to understanding where it fits, whether it fits, and when it fits for you. So mate, once again, appreciate your insights. Great to see you guys kicking goals, and look forward to continuing to see that.
Awesome. Thanks, Ben. Thanks for having me on. Appreciate it.
All good. Cheers, team. We'll catch you next time.